So hey guys, welcome back to Accelerated Investor. I'm so excited to be with you. Today, I am interviewing a new friend of mine. His name is Chris Larsen. Chris has an amazing story of investing over the last 21 years, about the portfolio he built in college, and his first investment property, a duplex that he rented out, almost like a 6-unit duplex, when he was just 21 years old. And now in this interview, we'll talk about Chris's just skyrocketing success. Now, Chris owns a portfolio of over $225 million. He's raised tens of millions of dollars for his apartment holdings. Chris is going to tell you a little bit more about his book called Next Level Income. And Chris and I have an amazing conversation about everything from him being a professional racer and him actually quitting a race in the middle of a race because he knew he no longer wanted to race. We'll talk about his investing strategy of investing in light value add apartments that are in the path of progress. Also in his book, Next Level Income, we'll talk about how to create an opportunity fund, and we'll talk about it on this podcast. We also talk about over 24 of Chris's indicators or metrics that he likes to look at when he's investing in big multifamily properties. Some of his favorites, which include net population growth and also drilling down into the diversity of the employment base in a market. And he talks a little bit about more on how to analyze leases, specifically on how to look for diversification of employment so that he knows that his employment base will support the leases going forward. He also gives an amazing tip on how to use the United Van Lines website for your due diligence. We also talk about one of his deals that he's recently done that got an amazing valuation on a small commercial property, and then the property got almost wiped out due to COVID. All of his tenants couldn't pay their mortgage, couldn't pay their rent, which put Chris in a spot where he couldn't pay the mortgage. And now Chris was able to work with the tenants and work with the bank to create a win-win-win strategy for everyone. You're absolutely going to love this interview with Chris Larsen, whether you're starting out with real estate, whether you already have a good sized residential portfolio, or whether you're a huge multifamily operator. You'll love some of the tips in this interview with Chris Larsen from Next Level Income. Check it out.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So Chris, welcome to the Accelerated Investor Podcast. I'm so excited to spend some time with you, get to know you a little bit better, talk a lot about your money-making strategies, and especially these big multifamily syndications. But Chris, there's a lot going on in the world right now. Obviously, coronavirus, COVID, election, kind of political and social unrest. There's a lot of reasons for people to be negative or to be confused or to kind of have paralysis because they're not really sure what's going on. But like good entrepreneurs are always making hay, always making something happen. So I'd love to hear, Chris, what's the thing you're working on right now that you're most excited about? What deals, what kind of books? What are you working on literally today, next week that you're really excited about in your entrepreneurial journey?
Yeah, so I just finished recording the audio version of my book. And if anybody's interested, they can get it on our website, nextlevelincome.com. Just check out the book link. The book's up there for free. Don't have the audio version up there just yet, but excited to finish that. I will tell you, it's a lot harder to record an audiobook than I thought. You just have to be so precise. So it was a fun experience, Josh. And we're also, for the first time, this is since 2015, we are closing on 2 deals within each other about 2 weeks apart. So we're buying a beautiful property in Fort Mill, South Carolina, 2018 build. It's just under 150 units. And then we got another property under contract in Cary, North Carolina, another beautiful area just outside of Raleigh in the Research Triangle there. I was just touring it with my family last week. So yeah, I mean, we were talking before the show, like homeschool makes my wife and I, want to pull her hair out. But it's fun to have some stuff that we're working on, sharing with investors and get excited about every day.
Nice. That's fantastic stuff. So the book, Next Level Income, tell me about it. It's probably got some stories about your journey, your entrepreneurial journey, raising money, but next level income. Like what's the book title? Where did you come up with that? It's obviously typically a book title has a lot of meaning. So tell us about the book.
Yes, I'm not a real creative guy. I'm an engineer by training, Josh. So
Sure.
Everything's Next Level Income. We got nextlevelincome.com. The book's Next Level Income. Story behind it, about 2.5 years ago now, my marketing strategist said, "Hey, you should write a book." Because I was starting to build a cache of blog posts. I was sitting down a couple times a week and writing articles. And really the goal with Next Level Income, the first 10 is to educate investors. So I was trying to put articles up there because, as you're familiar with, Josh, people would call me and say, "Hey, can you tell me about this?" And I would write them an email. And after about, 75 emails, I thought, why don't I just write this and put it somewhere so people can read it? And my marketing strategist said, "Hey, you could actually write a book out of these blog posts." And I was like, well, what did that look like? And we started talking about it. And I thought, well, if I'm going to write a book, why don't I do an outline? So I was in Toastmasters, talk about giving speeches and how to kind of build an audience and tell a story. So I wrote an outline and I thought, okay, I'm going to sit down every morning at 5 a.m., 5:30 a.m. and just write for an hour, on each of these subjects. So I would literally lay everything out. And it took me 2 weeks. In 2 weeks, I had the book written. We did an ebook. Finished that 2 years ago, but a lot's changed in the past 2-3 years. So we updated the book. We put some new stuff in. I put a new chapter in. I would call Your Opportunity Fund. And the book tells a little bit about my story, Josh, starting at age 21 as an investor. It talks about losing my father at age 5, losing my best friend when he was 18. I was 19 at the time. My journey to become a professional cyclist and why I put that to the side to ultimately chase financial freedom and now try to help other people achieve the same thing.
That's phenomenal. So in the book, I'm curious, most people that I know that are successful entrepreneurs have some event that usually happens in their life, good, bad, somebody, a lot of times, honestly, bad situations. I'm a pancreatic cancer survivor. That was the kind of catalyst for a lot of things in my life. I'm curious if your entrepreneurial journey has one of those moments, one of those stumbling blocks, if you discuss it in the book. Tell us about that.
Yeah. So, people that know me, they hear, "Oh, losing your father at age 5, that must have been terrible." Truth is, I was so young, it really had a limited impact. And I was raised in a Christian household. And I told my mom, I was like, it's okay because he's with God now. So to me, the normal was having my stepfather, great man, help raise. That was normal. The moment for me was when my friend passed away. We're at a bike race. He had a brain hemorrhage, and I actually went to the hospital. And I was the one that identified him in the hospital, and it was a shock. I put my head down for a year, and all I wanted to do then, Josh, was race my bike and be a professional cyclist. So I'm at Virginia Tech. I'm an engineering student. I tell people I knew 2 weeks in the program, I didn't want to be an engineer, but it was okay because I was going to go race my bike. And I thought I'll come back, and maybe go to grad school and figure out what I want to do. And I actually I was always kind of entrepreneurial. I had these side businesses that I would have because racing a bike, you don't make a lot of money. So I still want to have some financial means. When Chris died, I told myself a couple things. One, I said I'd never let an opportunity pass me by. I said, "Hey, Chris, we should go do this." I'd say, "That'd be great." That's part of the reason I quit racing my bike because it's so restrictive. You're so disciplined in your training, your diet. I wouldn't drink any alcohol as a college student. I wouldn't even take an Advil. I wouldn't stay up late. That hampers your social life and those sorts of things. I'll never forget. I had a girlfriend bring me a hot dog from a cookout that was on campus, and I said, "I can't eat that." And she's like, "What?" I said, "I don't eat hot dogs." Like, I can't. Like, Like this athlete can't eat hot dogs,
Right.
So even silly stuff like that. But really, a year after Chris died, and I talk about this in my book, I won for the second year in a row his memorial race. And for something that was so meaningful to me, race bikes and the memorial race for my friend who passed away just over a year before that, I felt nothing. And I won it like in dominant fashion.
Yeah.
So it should have been like the peak of my athletic career. And I felt hollow. And a week later, I was in another championships, and I pulled off on the side of the road in the feed zone. If you know anything about cycling, there's zones where you can like get a water bottle or some food. And my mother was there watching on a hill. And I pulled over and I just sat down, and she's like, "What are you doing?" And I said, "I'm done." And she didn't know I literally, like in my mind, I quit cycling. And she looked at me, she goes, "But you've never quit a race before." But I quit that day because I knew my life had more meaning than just riding my bike around in circles.
Right.
And I wanted to honor my friend's life. I wanted to honor my life. And I knew that there was things that I could achieve that were much bigger than that. It still plays a big part in my life, a lot of great relationships, but it was at that point that my life and focus really changed.
Yeah, no doubt. Now today, your focus is on your multifamily portfolio. Portfolio consists of 8 to 10 large acquisitions in the last several years, over $225 million of property owned. You've raised tens of millions of dollars for your deals. And you kind of did all this very recently in the last several years, kind of building up. You're very strategic about where you invest. You told me kind of getting ready for this, you have 3 specific markets. So just tell us a little bit more about your money-making strategy. Why did you pick apartments? Why did you pick large apartments? And, a lot of people kind of get into apartments as an evolution where they start with small deals, they start with wholesaling or rehabbing, and you have a kind of a different story than a lot of people. Where you kind of specifically took a career path that would help you meet accredited investors to invest in your big syndications. So tell us a little bit more about your deal flow right now, maybe some deals that you're buying. You describe these couple deals that you're about to purchase, and help us identify what does that look like, and help our audience understand how can they participate in that type of stuff, what kind of systems they have to do what you're doing.
Yeah. Josh, I appreciate that. So I started at 21, bought my first investment property. And I talk about in my book how I was day trading the stock market and just the volatility, the stress. I thought, I don't know if I want to be doing this when I'm 40 years old. So now 20 plus years later, I appreciate the decision my younger self made. But my strategy was really simple starting out, Josh. I thought, okay, if I can buy enough properties to have $10,000 of net rent coming in before debt service, I was like, okay, net expenses, $10,000 a month after tax. That's pretty good. Like that can provide a lot of freedom. Mm-hmm. So I bought enough properties that I had over 10 grand a month coming in. And the second piece of the problem after I figured out what the strategy was, I needed a job to produce the capital to do it.
In my newest real estate investing book, The Flip System, you'll learn the proven secrets and strategies that I've used to be a successful real estate investor. You'll also hear the story of my journey from quitting my job to doing over 2,000 units of apartments. The Flip System is now available for a limited time, and you can grab your free copy at getflipsystem.com/podcast. You'll learn the same proven principles and secrets and investing strategies that I used to quit my job and pursue a life of financial freedom. In this book, I'm sharing exactly how I was able to personally close over 750 profitable real estate deals, make over 400 private lender loans, raise over $30 million, and acquire over 2,000 units of cash flowing apartments. Get my newest book now for free at getflipsystem.com/podcast. That's getflipsystem.com/podcast.
Capital to do it. So I'll never forget going and sitting in, it wasn't Barnes & Noble, it was Borders in Christiansburg, Virginia, just outside of Blacksburg. And I got this book. It was like 100 careers where you can make over $100,000. So I had this, I need to make a lot of money so that I can have money to invest. That was the thought process in my head at age 20. And through a series of events, I ended up meeting a gentleman that was a friend of the State Farm agent I worked for, and he sold orthopedic implants. Now, I was in biomedical engineering, and here, 2 years earlier, we're going through like finite element analysis and how to design these implants. And I'm thinking to myself, I'm not smart enough to design these things. And here, I can take a career where I can understand the overall aspect and then work with surgeons to provide better patient care. And for somebody that had an interest in being a doctor, this was very appealing to me. Made good money. As you mentioned, I've met accredited, wealthy, affluent investors along the way. That wasn't necessarily why I did it, but it certainly provided kind of this confluence of events. So after over 10 years of owning and managing these single family properties, I realized and this took me way too long if you ask me, somebody that's got an MBA in finance, but I realized my return on equity was so low from where it could be. And then on top of that is somebody that was accredited, making hundreds of thousands of dollars a year. I was paying a lot of tax. And I was like, there's got to be a better way. So I became a passive investor in these multifamily deals. So why did I do it? I'm very analytical, and a lot of people don't believe me when I tell them this, but my wife and I moved to Asheville, North Carolina. And before we did, I had a stacked rank spreadsheet where Asheville was on there. So when it came up with a friend that was looking for somebody to move to North Carolina and work for him, I told him, I said, if you have something in Asheville, you let me know. And he's like, have you even been there? I said, no, but it makes sense on paper,
I love it.
This is the engineer. This is the guy that doesn't test drive cars. I just figure out which is the best rated and how I get the best price. So that's how I looked at it. Same thing with the medical device industry. I knew that there were these demographic trends that were fueling the medical device industry. So when I started to look at other options in real estate, multifamily was presented to me in a meeting with kind of in a conversation. And when I drilled into it, I found that millennials were fueling this renter trend. And I thought, these are the same reasons that I decided to get in the medical device field. So it was a no-brainer for me, Josh, because philosophically it made sense. It took me 2 years to sell all of my single family rentals and transition everything into commercial real estate. So that was in 2013. I decided to make my first investment in the multifamily space. So made a big jump, from like these little, single family rentals to boom, buying into 150 unit property. And then our first syndication was a few years later in 2016. And that was a 100-unit property, and now we're about to close on a 288-unit property coming up here. So we like the multifamily space for the demographics. I talk all about that in my book. We like the larger properties for the efficiencies that we can achieve. But really, we apply over 24 data points to decide what markets to be in, and then we once we let the data and the numbers speak for themselves, we go into those markets and really work on the relationships and sourcing high quality deals like the one that we're getting right now is an off market deal.
Fantastic. So you mentioned the 24 data points. I'm sure you cover that in your book. Tell me about some of your favorites. What are some things that stick out? 24 is great, but there's usually maybe 3 to 5 that I look at. You probably have 3 to 5 as well. It could be income growth, population movement, things like that. Because to acquire an asset where that area is going to grow, you can have the opportunity to have, very organic growth. It's kind of a light rehab, light value add, and just kind of buy and wait as the path of progress comes through. But many people want to start investing in their own backyard. So as you talk about your kind of favorite demographics and what helps you identify markets, also tell me a little bit more about how you got comfortable. Now, I know you live there now, kind of live in that market, those markets that you want, but you had to get comfortable thinking you were going to move to an area that you didn't know. You weren't going to invest necessarily in your backyard to start because the demographics told you where to invest. So help me understand the answers to those 2 questions.
Yeah, absolutely. So again, you're talking to a guy who won't test drive a car. I just trust the numbers. Yeah, so, sure. I don't, now I have to trust my intuition more and more. So the big thing is net population growth. So if you're looking at these investments, or you're just thinking in general, or let's say you're young and you're looking at where should I move to have the best opportunities in life, you want to move to an area where other people are moving. And in my book, I call it the rising tide. So population growth in an area is literally the lifeblood of a market. So if people are moving there, it's going to make whatever you're doing easier. unless you're trying to buy up a bunch of vacant land for cheap, that would probably be the only thing I could think of that would, make things easier if people were leaving. You want to live and you want to operate a place where people are moving. One of my favorite things, like if you don't want to dive into all the data and the numbers, go on United Van Line's website, and every year they put out a report, and you can see the states where people are moving from and where they're moving to. I love it. It's one of my favorite things to check out every year.
First time I've ever heard that little tip. I love it.
Oh yeah, it's again, like you have to dive deeper than that when you get into the markets, but it makes sense. Like people are moving from the Northeast. They're moving out of where the weather's not great and the taxes are high, and they're moving to areas like the Southeast where the weather's better and the taxes and cost of living's lower, better quality, lower cost of living. It makes sense, right?
Right.
Then you want to drill down, you go even further. So then you say, okay, we want diversity of employment. So I'll give you a counter example. So Houston 10 years ago was dominated by the oil industry. Now that's great industry, right? Well, when oil prices dropped and the oil industry suffered, the multifamily suffered there in Houston. Today, over a decade later, you have a much more diverse employment base. So that's another data point we like to see. What are the top 10 employers? Are they stable? Do you have government? Do you have universities? Do you have private industry? Or is it a one factory town? If it's a one factory town, that you have, some big concerns about what may happen. So let's say you found a region that you like, a state that you like, a city that you like, the employment diversity is good. Now you go into a property. So let's say we're looking at a property, and this is super important in March when we were doing due diligence on a property during COVID. We go and we do an employment analysis within the property. So if we have 200 units, we're going to look at what each of those 200 residents, what they do. And then we're going to determine what the risk is in each of those. So what we were looking for back in March was, do we have a high percentage of service industry workers, or do we have more white collar workers? And what we determined, we had about a 2% high risk resident base there. And do you know what our collections were 2 months later? It was 98%. So
pretty close, dang near 100%.
Yeah. So, a lot of times if you know the metrics to look at, you can kind of predict the way things are going to occur. Now, I don't like to bet. Like, I don't like to gamble. I don't like to bet. If I do bet, I like to bet on tidal shifts. So I bet on big long-term trends. So if people talk to me, if you look at my book, I try to pick things that I know are going to go on for like 10 years. Because if you bet on a rising tide, you might face some short-term challenges. So people, some of our investors really concerned about what's been going on this year with COVID. Hey, Chris, collections are down, maybe vacancies or economic vacancy is up. Well, we're not selling the property this year. So if you look at it over a 5-year period, the big trends aren't going to change. The demographic change, the fundamentals aren't going to change. So it provides a lot of comfort if you know that you're going the same way as the tide. It's a lot easier. You'd much rather paddle downstream than upstream, right?
Yeah. Love it. So your strategy, we talked a little bit about this getting ready, is, buy in the path of progress where there's net population migration, where there's stable jobs, diverse economic, and you purchase. And the strategy for your passive investors, for your limited partners, is kind of buy and hold 3, 5, 7 years and eventually liquidate and sell. So help me understand a little bit and help our audience understand a little bit more about when you've started doing, I know you invested passively. Everybody's always interested in learning, how can they be better at raising money? What can I do to kind of get my first big apartment building done? Maybe my first 150, 200 unit deal. What are some of the things that you remember about your first big raise? How it went? How did you get the money in the door? How you built those relationships ahead of time to kind of have them kind of warmed up and ready to invest in your first syndication. That first one is always a little bit of a grinder, not quite sure. You're like, oh boy, I think I can do this. I think I have it under contract. I can get non-recourse funding, but what about the $30 million I've got to raise? And then all of a sudden you're done, kind of wipe the sweat off your brow and you're like, we did it. Tell me about that for your first deal. Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast.
Yeah. So I'll never get somebody was like, hey, you guys raised $4 million for this deal. And I said, it was 4.5. And believe me, when you
were darn proud of it, it was 4.5.
Oh, well, when you're sweating that last $500K, like it's a big deal. So
Right.
we raised $4.5 million during our first raise. And what I tell people is, you can have somebody promise their first child, hand over their heart, swear to God that they're going to invest $100,000 in your deal, and
Right.
that's worth about 50%.
Yeah.
Like a guarantee, is about worth 50%. And no offense to investors, things happen. And as you know, Josh, when you have a financial relationship with investors, you learn a lot of interesting things. I've heard personal stories, ranging from divorce and sickness to things like having to rebuild a boat dock or something like that was unexpected. So things come up. So if you're going to raise and you need to raise $3 million, you want commitments of about $6 million. So that's rule number one. Over raise when it comes to the commitments that you have in hand. If you back up a little bit, you need people to know, like, and trust you. So I was fortunate to have kind of built a network over my career and have people that knew what I did both personally and professionally. And Joe Fairless, who's big in the multifamily space, says you need business success and real estate success ideally to be successful in this space. And I think people that understand business understand what we do in the multifamily space. So it's never too soon to begin building that network. We now have a platform. So I think if you're going to do this long term, having some sort of platform. And again, I stumbled into this. We started Next Level Income to provide an educational service for people. The opportunities is secondary. This was really, we're just doing it for free as part of the mission that we have, but it's definitely helped to provide a platform for investors. So those are a few things. And then when it comes to, actually raising the money and bringing investors into a deal, communication is tantamount. You just have to
high level.
You have to have just a very transparent communication strategy. You have to always be honest. And you always, as we say at Next Level Income, put investors first. So, it's like, it's the Southwestern Airlines CEO. It's like, he has his formula, which is, is it going to be cheaper? Is it going to be more profitable? Or is it going to be better for the passengers? And if it's not more profitable and it's not better for passengers, it doesn't fit one of those, then it's out. So we say, is this better for investors? Like, is this better for investors? Not, oh, can we make more money on this? Like, if I was an investor, would this be better for me? Always run our decisions through that filter. And people may argue with some of our decisions, and that's fine, but that is the filter that we put it through. It's worked for us. And I would suggest that if you are going to take an investor's money, always make sure you look in the mirror and say, is this really better for investors? Yes or no?
Yeah, no doubt. When I had Kevin O'Leary on the podcast, Kevin was talking about, look, when you start to build a business, you can kind of muscle it up to about $5 million. Then after $5 million to $10 million, which is where a lot of entrepreneurs fail, he talked about the ability for that entrepreneur to go from just muscling at working extra hours to their capacity to delegate. And then typically after 5 or 10 million and they have some capacity to delegate, bring on a team, now it becomes about bringing in investor money to really scale. And when you take on that investor money, just to kind of mirror what you just said, you now have like almost like a new boss, which is those investors are now your new boss. And it becomes, hey, what can we do to communicate better, provide better returns, more significant returns, but also more secured, more regular, consistent returns and to be able to communicate that on a regular basis and do it in a way that you can kind of communicate with everybody. So the fact that you said you have a platform, typically when you say a platform in this space, it means you have some sort of website, membership site, some sort of back office with deal flow and education for those people to be able to read articles, see updates on their deals, and be able to do it in a way where you can kind of communicate in that the one to many strategy, where you can put in the information one time and communicate with all your investors at once. So because they don't really want to, a lot of our people call us. I'm sure they call you too for updates. But if they can get a solid update by just logging into some sort of platform or membership area or investor update, they would rather do that. And then as a deal gets closer to refinancing or selling, then expect to hear, have your phone ringing off the hook all the time. So really, really cool stuff. So Chris, let's back up for a second. I know you sort of just told your story. Again, you talk about this in your book, Next Level Income. But let's back up to when you first got started with your very first deal, period, your first ever resi deal. Everybody remembers their first resi deal. And, when you talk about that deal, also tell me a little bit about one of the deals that you did that had a lot of hair on it. I love to talk about real investing, and not every deal is all roses and rainbows. I had a deal that I bought. It was a short sale, and I found out there was a double homicide in the property 7 years after I bought it. And the son was, had like a second personality, had like a little bit of schizophrenia, ended up murdering his parents. So I had some deals that had a lot of hair on them, right? So those are always the fun stories to tell. But tell us about your first deal. Tell us about some hairy deals so our audience can understand. Look, this is a real business. It's not always roses and rainbows.
Absolutely. So the first deal I did was 21. So we are looking at 21 years ago here in December, which is coming up real soon. I think it was right after the first day of winter. So I was living in a rented room in a townhouse in Blacksburg. I was a junior in college, and I was having issues with the wasn't working, and there was issues. I hadn't signed the renewal. So we're talking about, going into probably like October, and school had started in there like 1 or 2 months, and I'm paying the rent, but I hadn't signed a lease. So I see this townhouse up the road. It's just one row of townhouses come up for sale. And I was like, it's like this could be an opportunity. So I looked at it. We're talking about, it was like $90,000, Josh, back in the late 90s. And I was able to get an FHA loan, put less than $3,000 down, had my mom co-sign on it. And it was basically a house hack. So I thought, hey, if I can buy this and rent out 2 of the 3 rooms, I can live here basically for free, which is what I did. And that place next door. So I basically had my own little mini 6-unit multifamily deal. If you kind of match them up together like a duplex. So I was renting out for the 6 rooms, and I was self-managing it. So that was the first deal I did. I think it's a great way to get started. I tell people, if you're listening, you're like, hey, how do I do my first deal? You could do a house hack. You could buy like a fixer upper, like a fix and flip that you actually live in while you do it. And to be able to live in a property, create value, and then sell it on the backside tax-free, which you can do if it's your personal residence. I'm not your accountant, but look into that. Yeah, that's powerful.
I did the same, very similar, Chris. I bought my first investment property. I was staying with my buddy after college, living at his place. It's like, this is cool. But I kind of see my friend Kevin is renting out 2 of the other rooms. He wasn't charging us much, but I'm thinking like he's offsetting a lot of his mortgage right now by renting the other 2 rooms out to me and my buddy Tim. So I quickly went and bought my own duplex. I lived in the first lower unit, and it was a 3-bedroom. I rented out one of those to my buddy Josh. His name was also Josh. Then I rented out the upstairs to a young couple with a small newborn. And I basically lived there for about $100 a month. After all my expenses were paid and even the utilities and things, it cost me about $100. My mom thought, I was so young. I think I was 23 or 24 years old. Not only are you buying your first house, but you're going to be a landlord. Like, what are you doing? Don't do that. What makes you think you're going to be a good landlord? You're going to lose your ass. They're going to, break everything. They're going to steal everything. And I paid full price for it. I got an FHA loan exactly like you talked about. But today I own that property. It's nearly paid off. It's going to pay for, if I refinance it, it'll pay for most of one of my kids' college for at least 2 or 3 years, tax-free. And I paid full price. So I think the lesson there is just to get in, right? Get into something that's manageable, something that's cash flowing, maybe a light rehab. And it's interesting to hear you talk about now your value add apartment strategy that's, 100 units, 150 units or more is still that kind of light rehab strategy. I like that as well. That's pretty cool. So Chris, tell me, you've probably had a hairy deal or two. You've probably had a deal that went a little bit sideways. Tell us about that.
I don't know if I have any, you kind of took some of the wind out of my sails with your double homicide story. But I think this is pretty cool because it kind of transitions between the two. So I sold that townhouse back in 2015, and while I was in the process of closing on it, like during that period, I was looking for an office in downtown Asheville for my wife to rent. So we're down here looking at some spaces. We're actually with our attorney at the time, and he said, "We just bought this place next door from the bank, and we're finishing it. We're gonna have some offices." And we went and looked at one of them, and I was like, "This is pretty cool." And he goes, "Well, Chris, you do real estate." He goes, "They have another one of a 7-unit for sale right down the road." So I went. He goes, "I'll show it to you." So this is our attorney showing me this, and I looked at it, and it was on the market for about $700,000. It might even more than that. So they had just lowered the price. I think it was like $725 at first. They'd lowered it. It was on the market for about $700,000. Took a look at it, and I talked to my friend who's a commercial broker, and I thought, I don't really need this, but we could buy it. And it was a mess. Like when you walked into it, Josh, it looked terrible. It was built in 2007, so it wasn't even 10 years old, but it looked like somebody moved out in the middle of the night. There was wires hanging out of the wall. Paint was all marks all over the walls. There were ceiling tiles missing. It just looked like crap. Yeah. For somebody that I grew up with a stepfather was a contractor, I looked around and thought, there's not a lot wrong with this. It just looks like crap. Mm-hmm. Half vacant, half of the 7 units were vacant, and the other ones were at 50% market rents. So I did a little back of the napkin, and I was like, we don't need it, but if I could do a 1031 exchange into this property, I'd save a lot in taxes and there's some upside. So I made an offer to the bank of $100,000. The bank came back at like $545, and we bought it for $525. Nice. So we put about $25,000 into it. 1031 exchange, put another about $25,000 into it to fix it up. Essentially doubled rents, which were still, I rented below market, got it leased up as quickly as possible, and 2 years later was able to refinance it. That property is worth about $900,000 today. Now the flip side is that's a commercial property. I had half my tenants here this past year shut down by the health department. So you have this like kind of home run of a deal that you came into and needed a bunch of work. From my perspective, it was easy work, but a bunch of work. Got it up to speed within about a year, and then everything's going great. And then one of my tenants, she had to shut her business down. That was finally profitable after 2 years. So I worked with her to transition out of that lease because she has 2 units rented. So I didn't want to kick her out of, kick both her businesses out. I wanted to help her main business survive. Mm-hmm. And then, so I helped her work through that. The other challenge was, these tenants really, they couldn't pay rent and stay solvent. So I worked with the bank. I was able to do some deferred payments, and I was able to pass on those deferred payments onto them. So they were able to survive for the 2 or 3 months that they were shut down. And, it's not great when you don't have any rent coming in, but having the bank be able to work with you and pass that on to your tenants who you have a relationship with, it was a learning experience for me. But it also made me feel good that, these individuals that I have a personal and professional relationship, I could do something for them, even though it wasn't optimal. So, it was neat because they pulled me aside afterwards and said, it's really cool. Like we were all in this together. And I feel like those relationships, they're going to be with me as long as they want to be there.
Yeah, that's fantastic. So I love the challenge that it presented. Great deal. Challenge presented out of nowhere due to COVID. And then, being resourceful, which I think most really successful entrepreneurs have that trait of being extremely resourceful, flexible, find a way, find a solution. That's part of what kind of scares me about this upcoming election with a lot of the socialism talk. Is you remove a lot of that creativity, you remove a lot of the entrepreneurship when you have more of a socialist society and everybody gets paid for regardless of what they contribute. You contributed in a big way in that deal, and we're able to help people stay solvent because you had some skin in the game and you wanted to protect that. And so we'll see. We'll see what happens with the election. I don't want to go down that bunny trail, but congrats on being very, very resourceful there. So Chris, last and final question. I'm sure you talk about this in the book, guys. Make sure you pick it up. Next Level Income by Chris Larsen. Chris, you probably talk about in the book some of the lessons that you've learned along the way, things that you would maybe tell our audience, things you would pass along, pay it forward, pass back to your younger former self. After all of your successes, $225 million portfolio, big syndication deals. You got 2 more deals closing coming up 2 weeks apart, which is amazing. I know what that kind of raise can look like. We've done deals like that too. You've probably learned some amazing things along the way about yourself, about your relationships, about your entrepreneurship, about how to manage money. What are some things that you think are maybe some top lessons that you'd like to pass along?
Yeah, so number one, Josh, it all comes down to the people. And like you said, I talk about it in my book. I say real estate is a team sport. And I make an analogy to cycling. So people may look and say, oh, this, Lance Armstrong, and some people may not like the guy, but, pick out, a cyclist that has won like the Tour de France. People glorify that individual. There's a whole team behind him, a whole team, not just on the road, but people that are, preparing the food, the bottles, like talked about, the feed zone earlier, giving massages, driving, the vehicles, the team mechanics. Like you have this individual, and anytime you see, some, magnate or, person like Elon Musk in the business world, there's a whole team in those people. So number one, begin early building your network, and remember that those interactions that you have, whether it's with your boss or a coworker, or it might be, I have a terrific story about the person that worked in a cafeteria when I was really early on in my career. And like the cafeteria was closed and the surgeon that I was working with couldn't get anything to eat. And I run into this guy and we just, I'd been nice to him. And he goes, hey, let me go grab you a sandwich. And he went in the back and grabbed me and the surgeon some sandwiches. Here's a surgeon making $500,000 and a guy making 1/10 of it. And this, he's like, how did you do that? And I was just nice. I'd say hi to the guy. So just remember that those interactions that may seem innocuous are a reflection of your character, and they compound over your life. And ultimately, those will be determinant not only of success financially, but also the fulfillment that you have personally. And I think that, that is the biggest thing, is build that network. Remember that it's all about the relationships, and, you don't have to be cutthroat and put a gun to a person's head during every negotiation to be successful.
Yeah, I love it. There you have it. Chris Larsen, listen, thank you so much for joining us today on Accelerated Investor. I had a blast.
Me too, Josh. Thanks so much. It's been fun.
So guys, there you have it. I hope you enjoyed that interview for Accelerated Investor with Chris Larsen from Next Level Income. Check out the show notes for links to his book and his website. And guys, listen, we're all in the middle of change. I want to thank you for being here with me today. All of us are in the middle of change due to COVID, due to the election, due to changes in the economy. I'm sitting in a very bare office recording this in my home because we recently bought an 80-unit apartment building and decided to move some of our corporate office into the leasing office and get rid of our corporate office. So the painters just left. I've got a brand new home office where I am hanging out in today, but it's not decorated at all. So if you're catching this on YouTube, I've got this boring gray wall behind me. I promise you next time it'll all be decorated. We'll be excited and ready to go. So we're going through some change as well. I'm excited. Upcoming, I've got a closing on a 16-unit apartment building. I've got a closing on a 112-unit apartment building. We just closed on this 80-unit apartment building. There's a lot of amazing. We just looked at a 52-unit apartment building. We just listed one of our latest rehabs for sale. We're also winding down our private equity fund and pivoting those dollars in the multifamily and apartment buildings. We just bought a 5-unit. We just bought another duplex. There's been amazing things going on. So there are real estate deals happening. There are real estate entrepreneurs making money, and Accelerated Investor, this podcast is the absolute best place to find that information and hear from those experts and hear solo casts and strategies and techniques from me. If you've enjoyed it, please leave us a rating and review in YouTube or in iTunes. And again, I want to thank you so much for participating with me, sharing with me, giving me the opportunity to come into your life every single week, a couple times a week with the Accelerated Investor Podcast. Thank you so much for being here. Have a fantastic rest of your day. We'll talk to you soon. Take care. Hey, Josh here. And do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes. Okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're going to do then is every week we're going to pick our favorite rating and review, and we're going to send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.